Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at MP Materials.
If you find our talks useful, please consider subscribe, like, and comment underneath.
And a quick note before we get into today's stock. If you need emergency cash and want to look at a short-term installment loan option, you can check out MaxLend Loans through my link below. Eligible customers may qualify for loan options up to $3,750, and funding may be available quickly if approved. But please be careful. Always read the full loan agreement, APR, fees, repayment schedule, and total cost before signing anything.
So if I told you that the fate of America's F-35 fighter jets, the future of global robotics, and really the entire domestic supply chain for EVs, all rested entirely on a single dusty patch of dirt in the California desert, you would probably think I was just exaggerating for dramatic effect.
I mean, it sounds like a movie plot.
It really does. But we are looking at a stock today where that is exactly the underlying reality. I mean, you look at the chart for MP Materials, and the momentum is just staggering. We are talking about a stock that is up over 168% in the past year.
Yeah, and let's add some context to that momentum because 30% of that run-up happened just in the last month alone.
Wow.
It is an incredibly aggressive vertical move that is catching a lot of the market completely off guard right now.
Which naturally makes the analytical, cautious part of my brain start flashing bright red warning lights.
Sure.
Whenever you see a vertical climb like that, especially in the commodities or, the mining space, you really have to ask yourself the hard question. Is this just another short-term speculative hype cycle riding the coattails of the broader metals market?
Right.
Or, and this is where it gets really interesting, for anyone trying to build long-term wealth, are we actually witnessing the birth of America's most critical industrial infrastructure?
That is the exact tension we need to navigate today. Because, I mean, if you just glance at the surface-level price action, the easiest thing in the world is to dismiss it as a momentum trade.
Yeah, just a crowded, overbought bubble.
Exactly. But when you look at the underlying mechanics of what they are actually building and the geopolitical forces that are acting as a massive tailwind, well, the narrative shifts entirely.
All right, let's move into the wealth-building context.
So if we connect this to the bigger picture, you have to frame MP Materials within a multi-year portfolio growth mindset. We aren't just talking about, digging dirt out of the ground here.
Right.
Rare earths are fundamentally the new oil. They are the absolute non-negotiable bottleneck for the entire 21st century economy.
I want to pause you right there because I think a lot of people hear the term rare earths and they just think of it as some generic ingredient, like flour in a recipe.
Yeah.
What do these materials actually do?
Yes.
Why are they considered the bottleneck?
That's the crucial question. It really comes down to something called NdPr, or neodymium praseodymium. What NdPr does is create the world's most powerful permanent magnets. To understand why that matters so much, think about how an electric vehicle motor works.
Yeah.
If you use a standard electromagnet, it requires this continuous heavy current of electricity from the battery just to maintain its magnetic field.
So it's constantly pulling power.
Exactly, and that generates massive amounts of heat and rapidly drains your battery.
So the car basically becomes heavy, hot, and incredibly inefficient.
Spot on. But if you use an NdPr permanent magnet, it generates an intense magnetic field entirely on its own.
Oh, wow.
Yeah. This means your EV motor can be vastly smaller, dramatically lighter, run much cooler, and, drive significantly further on a single charge.
That's a game changer.
It is. Without NdPr, the modern high-range electric vehicle simply does not exist. And that exact same physics applies to the motors in advanced robotics, the turbines in offshore wind farms,
and the defense stuff, right?
Yes, the guidance systems in next-generation defense platforms like the F-35.
And that brings us to the massive, glaring geopolitical risk that has just been hanging over the global market for years now. Right now, the global supply chain for these incredibly vital elements is overwhelmingly dominated by China.
Completely dominated.
We are almost entirely reliant on a single, increasingly adversarial foreign power for the materials that run our cars and our military.
Yeah, it's a vulnerable position.
So bringing this back to you, the listener, when China decides to restrict these exports, it doesn't just hurt abstract defense contractors. It means the price of the EV you're looking to buy next year could spike by thousands of dollars overnight.
Exactly.
Reshoring this supply chain is really the only firewall protecting American consumers and American industries from that exact shock.
And that is why this is not just, a nice business model. It is literally a matter of national security manifesting as an investment thesis. The strategic value of securing a domestic supply chain is almost unquantifiable right now.
It reminds me of a farmer. Let's imagine you are a farmer, and for years your entire business model has been pulling raw wheat out of the ground, packing it into massive cargo ships, and selling it overseas for absolute pennies on the dollar.
Okay, I follow.
You're doing all the heavy lifting, taking on the weather risk, the farming risk, the labor risk. But the overseas refinery is making the real money, right? Processing it into high-end goods.
Yeah, they get all the margin.
Right. But then one day, you decide to stop exporting the cheap raw wheat. Instead, you build a massive state-of-the-art bakery right there on your own farm, and you start selling premium, high-margin artisanal bread directly to the entire country.
That is a phenomenal analogy for what MP Materials is executing right now. They are moving up the value chain in a dramatic structural way. They're transitioning from a simple mining operation to a highly sophisticated technology manufacturer.
But to see if that story is actually translating to the bottom line, we really have to look at the math.
Definitely.
Now let's look at the fundamentals.
Because keeping that bakery analogy in mind, we need to look at the actual numbers they're putting out.
Yeah, and I want to play the cautious skeptic here. I look at the recent Q4 2025 numbers, and I see revenue coming in at $52.69 million. By Wall Street's strict standards, that was actually a top-line miss.
Right. It was.
The revenue came in lower than the consensus expected. So, logically, I have to ask, how is missing your revenue targets a good thing?
What's fascinating here is that the revenue miss was not a failure of operations. It was entirely intentional.
Wait, intentional?
Yes. It is the mathematical proof of that metamorphosis you just described with the farmer. They are deliberately pivoting away from selling that low-margin raw concentrate to China.
Huh, okay.
If they wanted to just hit the Wall Street revenue target, they could have easily just shipped more cheap dirt overseas. But instead, they withheld that raw material to process it themselves.
So they took a short-term hit on the top line.
Exactly. And the proof that this strategy is working flawlessly is in the bottom line. They hit a massive GAAP earnings per share beat of 9 cents. The analyst consensus was looking for just 2 cents.
That is a 350% surprise.
Mm-hmm.
I mean, that's not a rounding error or some accounting trick.
No, it's a structural shift in their profitability.
Mm-hmm.
And it happens specifically because their production of NdPr oxide, which is that highly processed, highly valuable material we talked about, hit a record 2,599 metric tons.
Wow.
That is up 101% year over year. They are already running at an annualized rate of about 4,000 tons, and management is aggressively targeting a run rate of 6,000 tons by the end of 2026.
Okay, so the margin expansion is visibly happening. And when I look at the balance sheet, I have to admit, it looks like an absolute fortress. They are sitting on a staggering $1.166 billion in cash.
It's massive.
This is a 312% increase year over year. But playing devil's advocate here, I have to point out the elephant in the room. This massive cash pile didn't just come from organic business operations.
No, it didn't.
A huge chunk of this is thanks to the United States Department of Defense. The DoD stepped in with a $400 million preferred equity investment and an additional $150 million loan. To a free market investor, isn't that a massive red flag? Yeah. Isn't that just government life support keeping a capital-intensive business afloat?
I hear that concern, and, in a normal vacuum, relying on government funding is absolutely a red flag. But you're looking at this as a traditional free market commodity, and it's not.
What is it then?
This is a proxy war for global supply chains. It's less life support and more building a national fortress. MP Materials is now the only scaled, fully integrated rare earth producer in the entire Western Hemisphere.
The only one.
The only one. They control the Mountain Pass mine, which is one of the richest rare earth ore bodies on the planet. But the real magic, the piece that completely changes the risk profile here, is that the U.S. government has effectively backstopped their downside risk.
How so?
They secured a 10-year price protection agreement with the DoD that sets a hard floor of $110 per kilogram for their NdPr products.
Wait, let me make sure I understand the magnitude of that. So even if the global commodities market crashes tomorrow and the spot price of rare earths plummets to rock bottom, The U.S. government guarantees they will still get paid $110 a kilo.
Precisely. It completely eliminates the notorious boom and bust cycle that usually destroys mining companies.
That's incredible.
Add in the fact that they have anchor customers like Apple and General Motors locked in, and you can see why analysts are projecting an explosive 940% earnings growth next year. They have the capital, the locked-in customers, and an impenetrable government safety net to really execute their long-term vision.
That brings us to the catalyst timeline.
Yeah, let's talk about what's coming up.
Because all these multi-year projections are great for the long-term thesis, but for anyone watching the stock right now, there is an immediate ticking clock. Q1 2026 earnings are today, May 7, right after the closing bell.
Very soon.
The street consensus is expecting an EPS loss of 5 cents. Now, a negative 5 cents doesn't sound great to the untrained ear, but context is everything here. A year ago, that loss was 16 cents.
Right, so the trajectory is what actually matters. If they beat that negative 5-cent estimate, or even just meet it while providing strong forward guidance, it firmly cements the narrative that this profitability inflection is real, that it's sustainable and accelerating.
Makes sense.
But what institutional money really wants to watch is the BofA Securities Global Metals, Mining, and Steel Conference coming up very soon on May 13.
What's the specific trigger event we are looking for there? What are they going to announce?
The Chief Financial Officer, Ryan Corbett, is going to present critical operational updates. Wall Street is going to be laser-focused on two specific things. First, the Stage 2 debottlenecking.
Which is what exactly?
Which is essentially how efficiently they are smoothing out the kinks in their current chemical separation facilities.
Okay.
And second, the massive 10X facility timeline. The 10X facility is their future state-of-the-art magnet manufacturing plant being built in Texas. Any positive news pulling forward the timeline for that Texas facility is going to be a major catalyst.
I have to push back a little on the macro environment, though. We are seeing escalating U.S.-China trade tensions almost weekly now. We are talking about tariffs, harsh political rhetoric, massive supply chain anxieties. Usually friction like that disrupts global shipping and really hurts companies with international footprints.
True.
Does this macro environment hurt MP, or does it help them?
It acts as absolute high-octane fuel for them.
Really?
Oh, absolutely. If China decides to retaliate against Western tariffs by putting further export restrictions on rare earths, which they have threatened before the panic in the broader market will be palpable.
Everyone will be scrambling.
Automakers, tech giants, and defense contractors will be completely desperate for domestic supply, and MP Materials is quite literally the only game in town. Every single headline about trade tensions reinforces the sheer necessity of MP's business model.
Now let's pivot to the chart.
Let's look at the price action.
Because you look at this aggressive ascent we talked about, the stock is approaching the highest levels we've seen well over a year. And the immediate visceral reaction for a risk-aware investor is, this is overextended. The rubber band is stretched way too far.
I get that.
Are we looking at a speculative bubble waiting to pop the moment momentum slows down?
I wouldn't classify it as a bubble. What the chart is showing us is a psychological breakout.
What do you mean by that?
The market is fundamentally re-rating the DNA of this company. For years, it traded with the depressed multiple of a volatile boom and bust miner. You dig the rock up, you sell it, and you just pray the commodity price holds.
Right.
But now, institutional investors are looking at that DoD price floor and the advanced manufacturing facilities, and they are starting to price MP as strategic industrial infrastructure. And critical infrastructure commands a significantly higher premium than, just a hole in the ground.
That re-rating is definitely visible when you look under the hood at the options market data. I was digging into the spread, and traders are currently pricing in a 6.15% move for the upcoming May 8 expiration, which is right after earnings hit.
Okay.
But here's why you cannot just take those numbers at face value. Historically, MP's average move on the day after earnings is 6.23%, and the average total range of the stock on that day is over 10%.
That's a big gap.
Yeah, exactly. So if you look at the historical math, the options market might actually be severely underpricing the potential for a violent upside breakout here.
That is a critical insight. The market makers are bracing for a ripple, but history tells us to prepare for a tsunami. And you have to factor in the retail momentum, too.
Oh, retail's definitely paying attention.
Jim Cramer recently gave the stock a very high-profile endorsement on Mad Money. While institutional money is what moves the heavy volume and sets the floor, retail excitement adds a very real psychological bid to the stock.
Yeah, the FOMO.
Exactly. That retail FOMO can really exacerbate those violent upward moves, especially when the options chain is underpriced, like you just pointed out.
So what does market sentiment look like?
If you look across Wall Street right now, the overarching mood is incredibly bullish. You have 13 strong buy ratings, 2 moderate buys, and only 1 hold.
That's a solid consensus.
It is. The average price target is sitting at $78.71. But the absolute standout is Wedbush. They recently initiated coverage with an outperform rating and a $90 target.
90?
Yeah, and it wasn't just the price target, it was the language they used. They explicitly labeled MP as America's rare earth national champion.
Wow.
That is a very powerful, very deliberate phrase. It's almost an anointing.
It really is. But if things are so universally fantastic and the stock is effectively anointed as a national champion, I have to play the skeptic again.
Go for it.
Why did the CEO, James Litinsky, recently sell 300,000 shares at around $64? As an investor, when the guy running the bakery starts selling his own bread to the public, you immediately have to ask if he knows something we don't.
It's a completely fair question, and it's one of the most common mistakes everyday investors make.
Okay.
You have to look at the mechanics of the sale.
Okay, lay it out.
This was executed under a standard 10b5-1 automatic trading plan. These are scheduled months, sometimes years in advance to manage an executive's personal tax liabilities and liquidity.
Ah, I see.
It is designed specifically to avoid any accusations of insider trading based on current events. It is absolutely not a directional, bearish signal on the company's future.
So it's routine financial planning, not a panic button.
Exactly.
Yeah.
If you want a real wealth-building lesson on how to read the tape, don't overanalyze a scheduled executive tax sale. Look at what the institutional whales are doing.
The big money.
Right. And right now, the biggest whale in the entire ocean, the U.S. Department of Defense, just made a multi-hundred-million-dollar equity investment. That is the ultimate, undeniable signal of long-term commitment.
And that leads perfectly into the rumor mill, which I really want you, the listener, to seriously consider. The DoD has publicly stated they are aiming for 10,000 metric tons of domestic magnet production. Yep. MP is currently scaling toward 6,000 tons. So there's a massive 4,000-ton gap in domestic supply. Who else desperately needs this material? If you are a major defense contractor like Lockheed Martin or RTX or, an EV giant like Tesla, can you really afford to rely on Chinese export goodwill right now?
You absolutely cannot.
Right. The speculation that MP could soon announce massive multi-billion-dollar offtake agreements with these industrial giants is a very real undercurrent driving this bullish sentiment.
It's a seller's market. The demand side of the equation is practically infinite right now because the corporate fear of a sudden supply chain disruption is at an all-time high.
Now let's talk about the risks.
We have to.
Because we absolutely cannot ignore the valuation. Right now, MP is trading at roughly 225 times estimated 2026 earnings and nearly 40 times trailing sales. I don't care how good the narrative is, that is nosebleed territory.
It's extremely steep.
That is a multiple that assumes absolute perfection. It prices in a flawless execution of their entire, highly complex business plan over the next 5 years. If they announce a 6-month delay at the Texas facility, that multiple will compress violently, and the stock will get crushed, regardless of the long-term thesis.
I agree with you completely, and we cannot gloss over this. The execution risk here is immense. We talked about moving up the value chain from mining to advanced magnet manufacturing. That is not just pouring concrete and building a new warehouse. It involves highly complex, incredibly sensitive metallurgy.
Right, they aren't just melting down metal in a furnace.
Exactly. We are talking about isolating elements that are chemically almost identical. To put the extreme difficulty of this into perspective for the listener, imagine someone hands you a massive bucket of sand.
Okay, I'm picturing it.
And they ask you to separate the light brown grains from the dark brown grains.
That sounds literally impossible.
It gets worse. Now imagine having to do that blindfolded, using only highly sensitive chemical reactions at a scale of thousands of tons.
Oh, man.
That is what rare earth chemical separation is like. It requires hundreds of sequential solvent extraction steps. If the pH balance or the temperature is off by a fraction of a degree, an entire batch is ruined.
So the margin for error is basically zero.
Basically. And the magnets they produce at the upcoming Independence facility absolutely must meet the zero-defect tolerances of an aerospace contractor or an EV drivetrain. They must successfully qualify their magnets in the second half of 2026. If they fail that qualification, that 225 PE ratio is going to cause a lot of pain for investors.
It's like trying to bake a perfect, delicate souffle inside a wind tunnel. The chemistry and the engineering have to be absolutely flawless.
Beautifully put.
But I will concede that while those operational risks are undeniably high, they are heavily cushioned by reality. If things go wrong and they hit a snag in the metallurgy, they have a $1.166 billion cash pile to burn through while their engineers figure it out.
They have time.
And even if the broader market turns against them, that DoD guaranteed $110 per kilogram price floor acts as the ultimate downside safety net. They're insulated from total ruin in a way that most companies trading at these valuations simply aren't.
That's exactly right.
So with everything on the table, what's the final verdict?
Based on the structural advantages, the geopolitical tailwinds, and the impenetrable financial moat we've outlined, the final verdict lands at a highly confident bullish score of 9 out of 10.
Wow, a 9.
Yes. The clear long-term investment view here is that MP Materials is a multi-year hold. You aren't just trading the Q1 earnings ripple today, you are specifically targeting the 2028 10x facility commissioning and the full realization of their massive margin expansion. Despite the recent explosive run-up on the chart, the market is still fundamentally underpricing the sheer permanence and necessity of America achieving true rare earth independence. They are literally building a critical piece of national architecture.
We started this conversation by asking if this was just a short-term hype cycle or the birth of crucial infrastructure. And it seems incredibly clear that they have in fact built the bakery. Now we just have to wait and see if they can bake the bread to perfection.
Let's see what happens.
Need emergency cash. MaxLend Loans offers short-term installment loan options up to $3,750 for eligible customers. Apply through the link below and carefully review the APR, fees, repayment terms, and total cost before accepting any offer.
And if this episode helped you, please subscribe, like, and comment underneath. We'll see you in the next Smart Wealth with Joshua episode.